Here we have the 15-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. As we can see here, we've got a bit of an interesting sideways price movement here. For some people, these types of movements I think are not very exciting, and they don't like to, experience this type of market activity. But overall, I do think that this current trend action that we're seeing here is a lot more encouraging than it might look. It's a lot more encouraging than it might appear. There are a few different reasons for this. Overall, we were expecting to see, a major reversal here in share prices. We were seeing a bullish divergence on these shorter term timeframes. And this really did signal an end to this prior downtrend that we were seeing previously. This is what was really getting people concerned. I mean, anybody that's not happy with the sideways trading activity, I suggest they take a step back on the charts a bit because things were looking a bit more dire not too long ago. But we did see a reversal here in prices that was expected. We did see a bullish divergence on the shorter term timeframes. And then with these higher lows here, we were able to identify this reversal pattern extremely quickly, really at the bottom. And there were a few different reasons for that. If you're interested in those explanations, you can see the prior videos that were posted on this. But currently what we're seeing here is a very stable uptrend price movement. And given the broader context here, I do think that this is an encouraging development. We have not yet recovered all of the losses that have been posted since the beginning of June. We have to remember that those price highs came in just below $6 per share, and we're not quite there at this point. But what this does mean is that we still have farther to travel here before we would be expected to encounter major resistance zones. The first thing I want to point to here is the indicator reading in the relative strength index. That's this purple line down here. The yellow line is the moving average of the relative strength index. So here what we have is sort of an attempted downtrend here, which would have started as prices were kind of reaching sort of near term highs, roughly around 535. This would have occurred during the beginning of this month. June 1st is when this would have occurred. So here we did have an attempted kind of downtrend here and an attempted increase in selling pressure at these highs. So in my view, this is short sell activity. We're seeing a bit of a rally here within a dominant trend that does hold lower. So, in my view, what the short side of the market was seeing here was sort of an opportunity to start selling the stock again at somewhat elevated levels, even while the downtrend, most of the momentum from the prior downtrend was still in place. But what we can see here is that this was a failed attempt here. We did see this downtrend start to occur. There was a little bit of progress here, I guess you could say, if you're a short seller. But this didn't last very long. I mean, this was extremely short term in nature, and then we saw a forceful break here to the top side. So this downtrend that I'm pointing to is right here, and then we saw this surging price movement where the relative strength index reached above 78. That's a fairly high reading. So this is a forceful move to the top side. After sort of a failed attempt to push prices lower. Another thing that I should mention here about this failed attempt is that it would have occurred during the week of the July 4th holiday. So why is that important? It's important because, during those types of trading periods, you see holiday thinned trading conditions. You see low liquidity levels. That really just means that people are pulling their orders out of the market. It's a holiday. Things are a bit unpredictable. You don't want to leave the money. You don't want to leave money in the market while you're out doing your barbecue and your fireworks and all this stuff while you're distracted. And you're not paying attention to the market necessarily. So you just pull your orders out of the market and you bring them back in the following Monday. And that's generally when the market tends to return to full strength. But this is important because it's much easier for short sellers to attack this type of stock during those types of circumstances, during those when we're seeing those types of trading environments. If you're seeing a low liquidity situation, it's much easier to push around market prices. It takes much less money to push prices lower. So, and this is when this occurred. So I think that this is significant here because I think it represents a failed attempt by the short side of the market. I think they sort of took advantage of a weak situation where the market was not trading at full strength, at full order levels. A lot of orders are pulled out of the market at that point. So there is an attempt here to send prices lower. We can see this in the indicator reading. That's this line down here. This is an attempt at asserting negative momentum into the market during a period of holiday thin trading conditions, but it fails quite quickly. Once markets return to full strength, that's this price zone here. You're seeing an upsurge in trading volumes, and they are on balance, highly favoring the top side. You see a little bit of, you see some red bars here, but for the most part, these are green bars, and that suggests that the current buying activity is positive. It's bullish. And it far outweighs the negative side of the market. So, once markets return to full strength, what are we seeing here? We're seeing a resumption of the uptrend. And then, if we just take a look at the trend as a whole, if we just try to kind of, get a sense of where things are going here, the uptrend not only is it positive, but it's positive in a way that's stable. This isn't like some extreme price move to the top side. When you're doing technical analysis and chart analysis of any asset, what you typically want to see is a price trend that exists at a 45-degree angle. So, imagine like a straight up would be a 90-degree angle. You want roughly half of that. And that's what we're looking at here. This would be much, much closer to a 45-degree angle than it would be, a 90-degree angle or something like that. 90-degree angles, prices going straight up. I understand everybody wants a short squeeze, but that type of price action is far less sustainable than this type of price action. So what this really tells me here is that we're forming a base here. We're forming a very strong base that is going to be much more defensible, much easier to defend under circumstances where the short side of the market is trying to enter in, during vulnerable trading periods, and try to force prices lower. And I mean, in my opinion, this is largely why this short attempt here did fail. They saw an opportunity during a holiday trading week, but this failed. I mean, we can see it right here. This is the downtrend, and then this is the surge. This is the upsurge, in market activity. So, and it's accompanied by increases in bullish trading volumes. So all of those confirm things in the same direction. They all point in the same direction, and they all confirm one another. So overall, this is a bullish uptrend. And while it might seem kind of boring here at these upper levels, I think it's much more important than people might realize. So here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.